Electric Avenue, and then we'll take it higher. Oh, we gonna ride down to Electric Avenue, and then we'll take it higher. Working so hard like a soldier, can't afford a thing on TV. Deep in my heart I adore ya. Can't get food for that kid. Good God.
Alright, welcome back. So in today's video, let's just talk about the world burning. Because it's pretty bad out there. It's carnage. I love watching these CNBC hosts shit their pants. And it's definitely a bear party now. Although I am bullish, right? We're bullish. MMG private members were like, we're having a party. Because gold and silver is just skyrocketing like I said it was going to, right? I've been warning you guys for months, right? The portfolio overall, I mean, it's up by a lot, especially since I made it public, or I started the website and I made it available for you guys, and some of the stocks are up hundreds of percent. My entire portfolio is up like 10x, but I've been accumulating since 2015. So yeah, and the party it's just starting. Like right now, we're doing a test of the mic. Check 1, 2, 3 before the band comes on stage and we start partying. So first of all, this isn't financial advice. Consult your financial advisor. I'm not a licensed financial advisor. This is more of an educational channel on learning how to trade and listening to me talk and give you guys my opinion about global macroeconomic trends, and I could be completely wrong. Although I've been right lately, or since, I don't know, I've been doing this. Alright, so go to MMG Invest before it's too late. Here's the website. This is what it looks like. Watch this video. Watch this video. And that's what to expect from the report and everything. So you want to do it before it's too late, right? Because this isn't just about getting rich. This is more about survival at this point. Because listen, we're talking about the collapse of like Western civilization. I'm dead serious. So it's also about surviving as much as possible and as comfortably as possible. You're gonna need money. You're gonna need resources. I personally, I'm not gonna be buying Lambos or anything. I'm just looking for like some land, like a farm, to ride this very turbulent times that are gonna come. I mean, there's talks about China and the U.S. They've been in an economic warfare for years now, right? That usually ends up turning into a real hot physical war, right? So I'm just saying things are going to get insane because globally markets are crashing. I'll show you guys charts of the Shanghai Composite. In the big picture, and I'm also going to talk about Bitcoin. I'll do some TA on Bitcoin. But yeah, I'm going to stick mainly to stocks right now. We're going to theorize on what could possibly happen with the stock market and gold and silver. I'll show you guys charts on that, what to expect, my predictions, and what I'm thinking. And, my track record's pretty damn good now. Can I be wrong? Sure, but we'll see. This is just my opinion, go around, get opinions of others, do your own research, and we'll see who's right. So where was I going with this? All right. So here's the new Belt and Road Initiative by China. Okay? You guys have to see the big picture because nobody talks about this. China is the new world superpower. Like, that's what they're trying to become. And Trump in the U.S. is trying to hold their hegemony. And China is very expansionary. Now, you see these are existing. The red right here are existing railroads that they've built that are going through Russia, and they're looking to build them through the Middle East. Now, India is not really a part of this, and India is sort of siding with the U.S. right now. Because, India fears China, and they should, because China it's very, very totalitarian. Like, they have social credit system, guys. And right now China is going into Hong Kong, right? They're taking over. Now, there was some sort of pact, after 100 years they could take over, but they're doing it early. And that's why you see those crazy, huge protests of like 1 million people protesting. And, China has their soldiers going in there. They're not dressed, they're dressed as civilians and running around with sticks just beating people. But, yeah, they're taking Hong Kong. So, and that's just minute of their expansionism. They've already gone into Africa. They've built highway systems through Africa. Okay? And they've built highway. You know what? Let me bring up a map real quick. So let's see if I can find this fast enough. How much highway they've built. They've built more highway than the U.S. has. Built highway through Africa. And of course, they've given loans to Africa. They're not going to be able to pay off those loans. And that's how China is going to colonize Africa. And they actually plan on bringing in like 10 million people into Africa, like Chinese people. Let's see, map. Wow. All right. So look at this. Trans-African Highway. And you can see right here, through South Sudan, all of that, all through Uganda, Tanzania. Here's another One Belt, One Road. You have your shipping lanes, your railroad going through the entirety of Russia, Middle East, then through up Turkey to Moscow, and then through Europe. But look at this. Look at all the roads Africa's built. I mean, China has built in Africa. It's crazy. So look at this. I mean, it's going through entire Africa at this point. Now, I'm not sure which ones are older roads. Here's another map. Who would call me? Just give me a second. Yeah, you can see these roads coming, these highways coming into Africa on the south here. Like all the major shipping ports in Africa, they've built highways going deeper into Africa. And Africa is a huge continent. It's like the largest one in the world. You know, these maps we look at, they're not real. If you look at a real global map, like an adjusted one, not the ones that you see in textbooks, Africa is huge, huge, largest continent. And South America is also very large. It's larger than the maps we use today. Look into it, all right? I'm not gonna go through that right now. Yeah, but these highways are going to keep expanding into Africa. So essentially, China, yeah, it's gutted the United States of its industrial jobs, and now it's becoming imperial and becoming the new world empire. And that's what we're seeing play out right now. And Trump's the only president to address this and to try to fight back through trade wars. And the Chinese composite, their stock market, it's taken a pretty huge hit. This is a weekly chart. It's on major support at 2,600. If it falls below that, it's going to hit another major support at 2,000. But I think it'll bottom out around there. And then it's going to probably go back up because China probably has a better chance of winning any type of war because they actually have all the industrial manufacturing base and all of the rare earth minerals and energy in the world. So going forward, you know, I don't think China's going to be like the U.S. I mean, it's not going to be a free market. It's sort of a controlled market, and it's very imperial. It reminds me of the British Empire, right? When they, you know, that wasn't an absolute free market either, but they were very imperial and they were very colonizing. And that's what China's sort of doing with the One Belt Road. The One Belt Road is free market, but it's China. What they do is they undercut everything, everyone on the entire globe because they have endless cheap labor. They have drones, human ants, drone robots pretty much, who will do whatever they have to do to survive, so they'll work for any labor, and they have no rights whatsoever. And they could just undercut absolutely everyone in the entire world. And then they steal their technology and then mass reproduce it at a much cheaper cost. Less quality, but... And they pretty much gut all nations. Now, the fact that Europe has this free trade route, and so does Russia, you know, they're going to benefit possibly short term, but the long term, they're going to get gutted just like the U.S. And that's what's going to happen. And then this is how China is going to like try to take over the world, I guess. Listen, guys, I'd rather have the United States rule the world. I mean, neither empire is perfect, that's for sure. We all know that. But listen, I mean, you have no rights with China. I mean, there's no constitution or what's left. Like in the U.S., yes, the constitution is just pretty much being taken away and eroded. But at least the people in the U.S. remember freedom, right? In China, they don't remember anything. Like they don't know of any freedom from the past, and they had a little more freedom recently in the past decade or two, but they're clamping down on that with the social credit system. So it's going to be a wild ride. Honestly, I think South America is the place to go. It's funny because, you know, they want to build the wall. Trump wants to build his wall. That wall is not for Mexicans. That's for U.S. citizens, I think. Because people are no one's gonna want to come to the U.S. as all this as shit hits the fan. So I don't know. That's what I'm thinking. Could be wrong. I mean, either way, open borders at the end of the day, it's all about globalization. And everyone's making a miscalculation because globalization is going to end up just being China. All right. China, I don't think they've gone into South America as much, but they plan on going in there as well. So, that's my macro view. Let's look at some articles. Here's a heat map. So Asian markets are just tanking with the U.S. because they're hand to hand. South American markets are also dropping. Europe, I don't know why it's green right now. That's going to drop as well. The whole world's just... shit's going to hit the fan globally. They're going to call this the Great Global Recession or some crap. Alright. So, yeah, I mean, look at this. Shanghai, all Asian markets dropping. So, Hong Kong's just getting annihilated, especially with China taking over. Because Hong Kong's a free, like, satellite mini country of, like, China now. Because the Brits gave it over, right? The Brits used to own it, and that's why they had more of a free market in Hong Kong. But now China's just taking it back. So China, they pegged their currency lower, or pegged it. I haven't even looked into it. And you know, everyone, all the pundits on the mainstream financial news, they keep saying that, and that's why the markets are tanking and the trade war. And I'll post this article so you guys can look at all these charts. But it doesn't matter. It's just economic warfare. And it's a currency warfare. You know, listen, guys, I'm not even shorting the markets because I don't have to. You're going to see, I see larger gains through the metals stocks than if I would have just shorted the markets. There's way more upside percent gains from just holding these stocks than outright shorting the market, and there's less risk in my opinion. Because because the market could always swing back up and we could have that stock market melt up, right? If once the Fed cuts to zero and starts up QE4 and starts money printing again. And all the central banks around the world are going to do that. So why risk shorting a stock when you could just short the entire damn thing and hold mining stocks, and you're guaranteed that they're going to go up no matter what. Stock market crashes, mining stocks go up. Stock market melt up because they cut rates and do QE. Your mining stocks are going to go up even more. It's like you can't lose buying mining stocks. That's how I view it. I could be wrong, right? Could be wrong. And I'm not even trying to trade any of this. Well, I am with some ETFs, but I'm just chilling and just enjoying the gains. It's literally all you have to do. Anyone could do this. So here's another good article talking about the repo rates with central banks. And this last paragraph, I'll read this. So there's not only are you going to have massive negative yields and money printing, you're just going to have political turmoil. I don't know if Trump's going to win. If he comes out with new laws taking more rights of Americans, I think he's going to lose. If the stock market goes into a bear market, he's going to lose. And if a lefty wins, that's it. The markets are just going to crash. And they ain't coming back. Probably for a very long time. Or the rest of our lives. So, that's what I'm thinking. I mean, if the lefty wins, everyone's going to just... The boomers, they're going to want like socialism. It's not even so. It would be communism. We're already socialist, and it's just gonna implode the entire system. Like every company is just gonna go out of business, like overnight, and there's no manufacturing base in the U.S. If Trump, if there's a hot war though, in that scenario, Trump would get reelected for sure. Because no lefty, they can't handle a war with China. So things are gonna get crazy, real crazy. Anything's possible at this point. All right, so let me read this. Well, for one doing, QE, while still above the zero lower bound, is guaranteed to raise concerns over Fed independence. To wit, any Fed action that results in balance sheet expansion to control front-end rates would likely receive the following criticisms. Fed indirect financing of U.S. Treasury fiscal deficits, independence of U.S. monetary and fiscal policies, and U.S. slipping toward MMT, modern macro theory, which is really just Zimbabwe-style money printing. Of course, each of these potential criticisms over Fed balance sheet expansion is rooted in the issue of too much U.S. Treasury supply and constrained dealer balance sheets. Of course, in any case of the modern monetary theory, the independent Fed will be done away with entirely as it starts monetizing all bond issuance, helicopter money. Right, so, by the way, the football head, what's her name? Janet Yellen and all the previous Fed officials were saying that the Fed is independent. Why are they? There was some article out. Why are they saying that? Of course it's independent. It was always independent, supposedly. So why did they have to come out and say that they're independent from the government? We all know they're not. They've never been, but it's just funny. I don't know how anyone buys this shit. I don't know how the markets buy any of this crap. It's so obvious. I don't know. Maybe I am smart. Of course, I've been listening to Peter Schiff for like over a decade. For like 15 years now. Oh, by the way, Peter Schiff, he might be wrong about something. So, remember when I asked him on his Q&A about the IMF issuing a global world currency backed by gold, and he said, well, the IMF doesn't have any gold, or they don't have enough. Well, I just saw this today. Apparently, they are the third largest holder of gold on record, on paperwork, in the world. So technically they can. US is first, Germany is second, and then the IMF. Italy is actually fourth. Now, China is the sixth, and that's probably wrong. I guarantee you China has double their amount, which would actually bring them very close to the U.S. They're just not reporting it. Because China is doing the art of war over here. And they're being very sneaky. And their game plan is, like, literally world dominance. Eurozone looks bad. Canada has, like, none. They're just going to be, I don't know. Who knows what's going to happen there. So, yeah. I also want to show you guys this. So, looking at the national debt, U.S. is number 1. China is actually number 2. So, it's funny how they're the largest economies in the world, but they're going head to head with all this debt. So, you know what? This kind of benefits both of them because they could blame the markets and the economy crashing. It's going to crash. War or no war, tariff war or no tariff war, both economies were going to crash anyways because they're both in bubbles, debt-driven bubbles. But they can just start a hot war and just blame it on that. So that'll be a great scapegoat for both of them, right? Japan's third. But this is in line. The U.S. is the largest economy still. China is second. And Japan is third in size. And Germany is fourth in size. So, and then the U.K. and then India, right? But this is what's very interesting if you look at this. So, is the debt to GDP ratio for the U.S. is 68%. China is 62%. Japan is like screwed. It's like 261%. Germany is 59%. United Kingdom 98%. So this is why the U.S., you might see a flight to U.S. markets and the U.S. dollar, and we've been seeing that actually in the past like year. That's why everyone's been running into the U.S. It's because of the debt to GDP ratio. It's actually not that high compared to other countries. But, at the end of the day, the U.S. manufacturing base is just not there to support this and to keep this going, right? And that debt to GDP ratio, it's going to explode in the next coming years. And then there's also external debt to GDP ratio, right? So the U.S. is at 86. China is only at 12. So China, because of that external debt to GDP ratio, China has like no international debt. China is holding all the U.S. debt, and it's at 86%. So that's why China could just press a button, sell all U.S. treasuries, and dump and blow up the U.S. bond market overnight. And that would, in China, the only reason they haven't done that is because that is legit an act of war, because that will literally, like 1930s style, implode the U.S. economy. Like overnight, over the weekend. Like, literally, like if that happened this weekend, next month, everyone would be out of work. And you have riots in the streets, and, you know, people will be starving like 2 months later. My stocks will be in the stratosphere. And, alright, so, and your physical holdings. So these are the times we live in, guys, alright? And before a hot war, that's what's going to happen. Will China do that? I don't know. But they can. I think they're just going to let the debt run off, and they're not going to buy anymore, and they're going to let it mature over the next like years, and maybe they will start dumping some, you know, as things heat up. But yeah, I mean, it's a global bubble. It's not just the U.S. And it's a global bubble because, well, it's what governments do when they have the printing presses, and the central banks. I mean, in a way, looking at that International Monetary Fund, right? Because that's the central bank of all central banks. In a way, they have been sort of, through monetary policy, in a very sneaky way, have been printing money and buying up gold, apparently. Because that's insane that they have it's not a... Dude, listen, the IMF is not... It's the central bank of the central banks. It's not a country. Why do they have the third largest holding of gold? It's because they've been printing and like siphoning it off of the world economy in other countries. And that's your bankers, right? Taking over the world as well. And that's why, I mean, how could you not be... Guys, by the way, that's pretty much proof that the Bitcoin's not going to be some global standard. Matter of fact, they're going to do a gold standard, and when that happens, it's pretty bad. I mean, it's bad for Bitcoin. The capital flight thing is good for Bitcoin unless they could stop it through regulations, which they are doing right now. That's why I'm a bear. You guys understand? And then because of the manipulation with Tether, that's going to be used for their regulations and banning later on. You guys, I'm always ahead of what's going to happen. Everyone else on YouTube, they say they're like, they report things real time as they happen. I am always weeks and months ahead of everyone else because I still use my brain. It's called critical thinking. Something they don't teach in school anymore. Alright, so here's national debt and all that. National debt clout, you know. Look at this. U.S. unfunded liabilities, it's at $125 trillion. They're going to pay that out, guys. They're just going to pay it out because they're going to sacrifice the dollar, and it's not going to be worth much. So $10,000 today, like 10 years from now, will be like, I don't know, like $500, like $1,000, something like that. Who knows? I don't know. I don't know if we'll have hyperinflation. If a lefty gets into office, we'll get hyperinflation. People will be eating their dogs and cats like Venezuela. Yeah. So if the Fed cuts rates and then goes back to QE, and the government doesn't cut jobs, if the, you know, and if we actually get like a hot war, I mean, this is like insane because deficits will explode. And I just don't know how any of it's feasible. Here's what I'm thinking. If there's a hot war, what they're going to do is, you know, a lot of people aren't going to have jobs, so they'll sign up to the military and go die. And then there will be a lot of manufacturing jobs created in the U.S. because you're going to be making, you know, tanks and stuff. So, and it's pretty much like the World War II rule book or some crap. I don't know. Well, I'm just theorizing. I don't know if that's gonna happen. I hope not. I really hope not. But we're looking at crazy times. There's also a possibility of just the public, the masses, just tearing everything apart, like the entire control structure, and that's what the elites are really scared of. So liability per U.S. citizen is $380,000. I don't know why anyone would even come to the U.S. because I'm telling you guys, that wall is not to keep people out. People are gonna be fleeing. Who's gonna pay that? I don't know. And that's now. Just wait till there's a recession. That number is gonna explode. Like, I don't know. Everything's just gonna get wiped out and defaulted on, hopefully. Alright, let's take a look at some charts, then I'll look at the yield curve. Well, I'll look at the yield curve now, screw it. So, let me take this back. Here's the yield curve. It's predicted the last 7 recessions. And, where is it? Here it is. And we are literally at that red line. When you look at the 10-year and the 2-year spread. Here's the historical 10-year to 1-year spread. We have hit the red line, and the yield curve inverts right before every major depression, recession. So here's here I'm gonna start it at the year 2000, so you can see how it inverts right before the Nasdaq.com bubble, and then how it inverts before the 2008-2009 mortgage-backed security crisis, and then till current date. So I'm going to play this, so you watch this on the left. This is the smaller yield for the short-term debt, and then here's the 30-year, all the way to the right. This is the tail end. So watch that as it happens. 2002, 2003, 2004, 2005, 2006, 7, 8. All right, did you see how it inverted right there? Let me bring it back to 2007 and 8. Stop. Wish I could slow this down. See how this inverted? The 1 month is higher than the 30-year. And the date on this was 2006. So when the yield curve inverts, sometimes you could have a year, like 16 months, 12 months, 8 months prior to the markets like crashing. All right, so let's take it to current. Well, okay, so this is 2006. Let me continue playing this. Then normalizes during the crash. It's 2012, 2013, 2014, 15, 16, 17, 18, 19, boom. So you see how the yield here on the lower debt is higher than the 5-year and the 10-year and the 7-year. All right. Well, the Fed, that's why the Fed is cutting rates to keep this down from inverting and going higher than the 30-year. Although I think the market's not that stupid at this point. They already see they see the writing on the wall. So here's the thing. When the markets figure out that this is it, I mean, the expansion, we've hit historically the longest expansion in U.S. history, and a recession is about to happen. And when the market figures out that the Fed has to print money and they can't ever normalize rates ever again, gold and silver is going to the freaking moon. I am very confident gold's going to hit 5,000 an ounce, and silver is probably going to hit 300 at least. Now, they could go into a bubble as things get crazy and globally everything starts falling apart. Is 8,000 out of the question? Is 10,000 an ounce out of the question? No, I don't. I think it could go that high easily, especially with China, with the global debt crisis that's about to happen. It's not just China and the U.S. It's also Australia, Europe, Canada. Russia's like the only one that's like not drowning in debt. So, and India's having major issues now too as well. Saudi Arabia will as well. So, I don't know how high it's going to go. It could go higher than anyone thinks. Because it could go into a bubble. And if that happens, I mean, you'll be sitting very pretty. Alright. Alright, let's look at some charts. Here's the S&P on the left here. Gold's right here. Here's the VIX. Volatility's super high. And my last video, I said the market was going to pull back. In my last few videos, this should not surprise my listeners and my viewers. Alright, so, we're hitting some support. There's some buying coming in right now. There was major support at 2,800 on the S&P 500. This is a daily chart. And I think the Fed's going to come out and cut rates. They're going to start hinting towards it. By the way, the futures are pricing in like a 70%. They're going to cut rates like 0.50 basis points to 0.75 basis points. I think they might even just go straight back to zero. And Trump and the Fed's going to say, well, it's because the world is at zero and at negative rates, and we can't compete with the world if we don't do it as well, which is stupid and asinine. But honestly, I don't think they have any other choice. They're just trying to keep the markets from crashing at this point. That's all it is. They're just buying more time. It's going to happen no matter what. The only question I have, and what I'm speculating on, is when they cut to zero and start the printing presses again, are we going to get... So let me move this arrow. are we going to see a melt up? Or is it going to just rally back up a little bit, not make a new high, and fall back down despite zero rates and zero or money printing, right? That's, I don't know which is, it's kind of like a coin flip at this point. The only thing I know is gold and silver is going to go up no matter what. So I don't care what happens, but it will be interesting. If we do get a melt up, I don't think it's going to go that high. I think it'll be, you know, I think it'll be short-lived. I don't know, but we'll see. This is what Trump wants, a melt up, so he gets reelected, right? Probably all the corporations as well on Wall Street, because they did all these corporate stock buybacks. So they all want a market melt up as well, so they could offload on the boomers and retail investors and international investors. See, that's the economic warfare that Trump is counting on and the U.S. is counting on. The U.S. will get a stock market melt up as the Fed cuts rates and does QE, and then it sort of sucks in all the global capital, and then all the international buyers come in, and the stock market melts up, and then the U.S. corporations will start selling at the top, and hedge funds, the smart ones, the big money, the smart money, they start selling off some more at the top, and then they leave everyone else with the bags as the market eventually corrects in a really, really big way. And that's what I'm like thinking that they want to happen. Yeah. So I think that's actually slightly, I think I give it a 60% chance that we get a stock market melt up rather than you know, they lower rates to zero and do QE, and then the market gets a nice bounce and then drops. I think the market will just go higher and higher, despite all weak economic data. So maybe the next year in 2020 and 2021, it's going to be like an insane party. But it doesn't matter because gold and silver stocks will still keep going higher because of inflation. And then right after that, like, it's just going to dump. Because eventually the inflation caused by zero rates and QE will actually destroy corporate profits and revenue. Because people will just stop buying things once, you know, food and everything gets so expensive. So eventually the debt will kill the bubble it's created. All right. By the way, I'm going to make a strategizing video for portfolio allocation and diversification, all that. Then I'm going to make another video on pretty much the phases of an empire. Okay? Because we're experiencing that right now. So here are gold ETFs, and they have been massively just rallying for the past month and a half. That's why I gave you guys a discount on my website, right? It was because I wanted to buy in and not miss out, and I need more money. And, you know, for the people who trust me and are early, you guys earned it, right? You guys deserve it. And there you go. Here's gold futures. And let it load here. I predicted this with my blue indicator line on the weekly and monthly time frames. And gold, guys, it's above 1500. Do you know what that means? That means we might have all-time highs in gold by the end of this year. So if the Fed cuts rates to 0, that might just get to go. That could get gold to 2000 right there. Once the Fed starts printing and QE, it's gonna be like gold $3,000, $4,000, 5,000, and this could happen quickly in the next year or two. So, guys, I am the only one on YouTube, like publicly, who called this perfect timing wise. Everyone else was a stop clock. All the old guys, Peter Schiff and all of them, they've been saying this for decades, but I'm the one who called the breakout because of my blue line right here. If you guys remember, nobody else called that. Like, I of course I'm not going to get credit because nobody knows who I am. I'm like, I just, started. I'm a nobody at this point, but, well, I'm somebody. People know of me, but, it's like nobody is going to give me credit. All right, so let's take a look at the Russell real quick. U.S. domestic 2,000 smaller to mid-cap companies. This gives you a good gauge of the economic health of the U.S. and is also a better forecast for the rest of the market, like the NASDAQ indices and the S&P 500. It's fallen to 1,500. And that is not very, and it's looking weak. So possibly some more downside on the S&P 500 and NASDAQ, we'll see. So the S&P could be on a dead cat bounce right now. This is just a weekly chart. Let me take it to a daily. So on the daily, the S&P, this could be just a dead cat bounce. And we go lower to 2,800. And that's sort of what the Russell 2000's hinting at. This is a weekly chart of the Russell 2000. Let's take a look at a daily. Or wait, let me look at the oscillators real quick. Yeah, there might be more downside. Let me take it to a daily. We'll see. I mean, it did make a slightly higher low right here. So if this is a dead cat bounce on the Russell, and it can't break back above the 200-day moving average, which will be around 1,500. Wait, no, that's where it's at right now. Around 1,518. If it can't get back above that, and breaks lower, makes a new low below 1487, then it's probably going to make a new low, and it might come back down to the 78.6 fib retracement. This is really nice. For people who say fib retracements don't work, they work pretty well. Here's a fib retracement right here, and it bounced right off of that 61.8, right? Fib retracement. Right now, it's attempting to make a newer higher low right here on the Russell 2000. So I think this is the key indicator to watch. Let's take a look at the transports. Here's a Dow Jones transports. This is railways and the semis transporting goods on the highway, transport, shipping as well. It's on support right now, and this is another key indicator to watch. So if it falls below this major support of pretty much 9,970, then there's definitely probably more selling overall in the entire stock market. I'm sort of jumping around right now. Here's the FANGs. Facebook, Netflix, Google, Amazon, So there is a buy indicate. No, there isn't. Never mind. Look at this gap down. That's crazy. So this as well. We'll see if we make a higher low here. We might. They're gonna do something. The plunge protection team. Something's gonna come out later this week to make the markets rally. The Fed's probably gonna come out and say something. So you could probably just start drawing like a giant triangle for the entire markets. So we'll see if we get a bounce, and then it trades in this range of this descending triangle and breaks lower. Now, obviously, if the fangs break lower, below 2,334, we're in a bear market. Like the stock market, all of it, it's just hardcore crashing. We'll see if we get that market melt up or not. All right, that's pretty much all I have to say. Silver. I almost forgot about silver. If you guys think that gold stocks have rallied a lot and you should wait for them to pull back in a big way, all I have to say is if silver just broke $17, major resistance, if silver breaks out and keeps going higher and higher, these mining stocks, and most of the gold mining stocks also mine silver, these mining stocks are going to explode. Like hundreds of % gains. Like week over week for like years. And you don't want to, if you're not holding any stocks and you're just like dicking around with Bitcoin, or I don't know what you're doing, you want to accumulate as many units of shares right now, because it's going to be more expensive as time goes on to accumulate units of shares, right? So I bought in 2015. I was able to buy, thousands of shares of a company. But if I didn't buy in 2015 and I were to buy now, I could only buy hundreds of shares, because the price rise from, like, let's say 50 cents to $3. It's only what is that? That's a 500% gain. That's only a 500% gain, right? But I was able to buy a lot of shares when it's at 50 cents. Do you understand? I was able to buy 5 times the more amounts of shares. Now, if the stock that went from 50 cents to $3 right now, right? If that share price ends up at the all-time high of gold and silver being like, I don't know, $50, $100, $150, the gains are exponentially much larger if you bought at 50 cents versus if you bought at $3. Do you know what I mean? All right. So, but I could be wrong. I don't know. Maybe the U.S. economy will recover and nothing will happen and metals go to zero. All right. So, listen to everyone. But listen, I mean, Ray Dalio's on my side at this point. The largest hedge fund and index fund manager in the world. I'm pretty confident. I'm that confident. So, but again, these are my thoughts and opinions. Go consult your own financial advisor and make your own decisions, all right? Okay, I guess I got Bitcoin. So, this entire rally, I've been wrong about Bitcoin. I've been shorting it and getting wrecked. And it's because of Tether. But there's more and more regulations and threats coming out. The UK right now is coming out with hardcore regulations. Listen, guys. If Tether is pumping the price, not only is it creating a bubble that's going to pop, the regulators could go after it, and it's a perfect excuse for them to come out with draconian laws against Bitcoin and cryptos, and they will, because they don't want capital flight, because that's what cryptos, that's the biggest value for Bitcoin and cryptos, in my opinion. It's the capital flight. And as international monetary and currency and economic warfare heats up, the last thing China and the US and all of them want is people to start going into crypto and moving money around. And they're going to go after it. I don't know when. But I don't think Bitcoin's going to go and make new all-time highs. Matter of fact, I don't think Bitcoin's going to break the recent high of like almost 14,000. I think, you know, right now we're getting another little bull trap, and it's going down. That's my gut feeling. That's what it's just what I believe. And the MACD on the weekly chart's going to cross pretty soon. And when it does, down she goes. I don't care how much tether they could print. Shit's going to hit the fan in cryptos soon. Here's a 3-day chart. Would have gave you an awesome buying opportunity. I didn't think it would rally all the way back up to 12,300, but it did. Oh well. Let's go to a daily. All right, daily. The daily count, the TDI is on an 8 count. 9 count coming up like tomorrow, and that's probably gonna dump the price this weekend. Hopefully, that's what my TA tells me. The price should freaking dump hard, and I will put on another damn short. I don't care. I'm gonna eventually catch it. I did already catch it over here and here. I'm gonna catch another short. If you don't place stops on your shorts, you're going to get liquidated. If you put on too much leverage, you're going to get liquidated with these tether pumps. I'm still holding my short from a few days ago. Still fine. And for the trolls, oh, you wrecked, bro. No, bro, I'm doing great. I've been shorting up here and here. Although, you guys have to understand, I have 2 short positions. One is, like, not leveraged. And the other one is, I take a couple $100 and I, like, 50 exit. So, yeah. So I'm wrecked when I'm leveraging with my other short positions. But my major short position, like taking like 10 grand and just shorting it at a 2x, I'm fine. I can handle that. But, I'm still gambling and dicking around with like a couple $100. I'll put on a $20,000 short. But, it'll wick up and like liquidate me real quick. But, I could handle losing thousands of dollars playing around and gambling. Eventually, one of them's going to hit and I'll make it all back, or I'll make a huge gain. So that's how I think and strategize. Most of you don't have money to do that, and you shouldn't. And, only Bitcoin's extremely speculative. It's not a value investment. Gold and silver is, all right? And treat it that way. So do not invest with money you really can't afford to lose. Smash some likes, leave anything in the comment section, and please share my videos. It's the only way my channel grows, and I'll continue to do this. Until next time, guys.